We turn now to Nicholas Lardy. He's a senior fellow at the Peterson Institute. Nick is also the former chair of the China program at the University of Washington, and his most recent book is entitled The Future of China's Exchange Policy. He joins us now from Washington, D.C. Welcome, Nick, to the show. Let's talk a little bit about this decision this morning. It's been 3 years since China has changed its rate policy. Were you surprised by the announcement?
A little bit, yes, but one factor that hasn't been mentioned that we have to keep in mind is deposit rates have been relatively low compared to inflation. That encourages people to put money into property as an investment, as was said, maybe a third house or a fourth property to invest in, because people have had very negative real returns on the money in the bank, and the authorities have seen that they're having a little bit of a struggle this time slowing down the property market, and one of the reasons is these real negative return on deposits. So yes, the lending side is important, but the deposit side was also a big motivating factor here.
Okay, so Nick, when you talk about negative real interest rates, you're saying that what they had in terms of a deposit rate versus the rate of inflation was actually lower, right? So the rate of inflation was outpacing what their deposit rate was, which was encouraging a number of people living there to actually invest in real estate as opposed to investing or depositing their money in the banking system. So here's my bottom line on the question is, does this mean that China is doing this more for their internal population, or are they, as we heard a little bit earlier, perhaps doing this for the U.S. or for the global perspective on the country?
I think they're doing it overwhelmingly for their domestic needs. If they wanted to allow their currency to appreciate, all they have to do is intervene less in the market. They wouldn't have to do anything on interest rates. I think this interest rate move is designed to slow down the property market, keep, inflation's running 3.5% on a one-year deposit until the change was 2.25, so negative 1.25% real return. That it's still negative after the change, but it's compressed a little bit. The negative gap has been reduced.
Earlier, Nick, in the year, China, the leadership there was dead set against, or their tone was very much that they weren't going to use this approach. They felt that it was a little heavy-handed to actually go in and intervene with rates directly. They were using different forms of quantitative easing, so to speak, or quantitative tightening, so to speak. Now they seem to have reversed course a little bit. We know that there are a slew of economic numbers coming out later this week. Are we going to see signs that inflation is heating up in this country much faster than we originally anticipated?
Well, I think what we're likely to get on Thursday is a very robust number for expansion of the economy, the GDP growth number. We're not going to get a new price number on Thursday, but we will get the GDP growth, and I think it's going to show very strong growth, and I think that probably underlays the decision to raise rates at this point.
So how does this affect the U.S. in the end, or does this have any effect on us? I mean, the yuan can only fluctuate so much. I think right now, with the way futures markets have been trading, suggests that, the dollar might appreciate slightly relative to the yuan. But what is your take in terms of the impact here in the U.S.?
I think the impact will be very moderate. I think the initial reaction was, oh, China's going to slow down, they're raising rates. As I say, I think we're going to find that China is continuing very strong growth, and the modest interest rate increase that we've seen will not have a significant impact on the U.S. Domestically, it will help them on some adjustments, for example, in the housing market, slowing down rate of investment a little bit. But it is not a big move. Remember, for the main benchmark rates, the changes are typically 25 basis points, which is not a very large move.